Totally awesome. Just go live. That shit's great. Yeah, switch me over. Wow. let's uh let's make all those groups get mad today. Let's see how many groups we can piss off. I kind of now enjoy it because now I go back and I see who didn't let my live rock and they thing. Man, I'm out. I'm out. I ain't gonna stress y'all. I ain't here to fight with y'all. I don't give a fuck. Mm. Just delete me. This is great. How's everybody doing? I'm gonna let everybody fall into the live. I don't even know anymore where I can and can't. I'm just posting it. What else? My bad. I swear, if it was a different way to do this, I would. But I kind of enjoy doing it right here because then I get to really see what's popping. And it'd be all type of stuff. There's really nothing going on. It's kind of gross. T.I. and Tiny is going to be a big part of today's show, but I didn't want to put that in the title because I'm not sure if they're going to start flagging that too. So, let's get right to the show. Today's podcast is going to be brought to you by the same old sponsors until we get some new ones. So let me start the show. And we got 2 guests calling in. So if you're interested in the stocks right now with the GameStop debacle, the story that we broke, I mean, it's definitely taking some legs. I suggest you stay tuned. We also have a realtor that's going to call in. He's a friend of mine, fellow agent. And I'm just going to have a conversation with him about what's going on in the Las Vegas market. And, you know, help out a couple folks and give perspective as to how the market's moving and what you should look out for these upcoming months. I'm drinking this coffee drink, and it's ridiculous. Can't stop, won't stop, GameStop. Like, when I first heard that, it was a joke, and it's just so epic now. It's gotta be a shirt. Oh, to listen to the music, you gotta head over to the pod. It's a good song this week too. Oh, we're gonna have a good fucking show. It's gonna be great. Mm-mm-mm. It's not bad. Hey, yo, sponsor mi Café Bustelo, mándame un cheque. Jodido. Oh, yeah, we speak Spanish, too. This is such a good song. I wish I could play the music. It's so lit. Hey. It's Kasabian Lavoe Wine. What's going on, beautiful people? My name is Kasabian Lavoe. Welcome to the Kasabian Lavoe Show, episode 150. Live from Las Vegas. It's a beautiful day. It was cloudy. It was rainy. These are my favorite days. Today we talking business, so let's get right into the business and get into the sponsors of the show. Of course, head over to klavo.com. Go to the merch area, pick up some merch, check out what we got, what's new. Check out the music, stream it, download it. We were supposed to drop a project, but we're gonna it's coming. I just don't know how many songs we're gonna throw on it. And it's done. So most likely it might drop either Sunday or Monday morning. We'll see what happens with that. Head over to klavo.com, check out the music, stream it, share it, talk about it. The merch, podcast link, everything is on there. klavoe.com. Head over there and I don't even know why I did that. Just head over there and check out what we got. Support the machine. It's the best way. Just share it. Tell somebody about us. And then Popple. The good old Popple. Head over to popple.co. P-O-P. Damn, can you see it? P-O-P-O. Kind of. All right. Head over to popple.co. P-O-P-L.co. Use Kasabian Lavoe at checkout and save you 20%. And I know you think, Kasabian, what's a popple? Well, here, look, I'm gonna show you real fast what a popple is. So, let's say I heard somebody over the I hear a conversation, maybe somebody's talking about real estate, and I say, hey, look, I'm an agent, but I don't want to hand out a business card right now. Pop me. That simple. They open it. My prospective client will get sent to a landing page, and that's all my information. Popple's dope. It's like a digital business card. And in the post-corona world, you really don't want to be handing out business cards. It's just kind of nasty. This is a clean way. It's green. We're not knocking over trees for a Popple. They're very affordable, and you save 20% by using Kasabian Lavoe at checkout. We'll put that on the description below. That's Popple, POPL.co. Use Kasabian Lavoe at checkout for 20% off. Big Sabo saves you the big bucks. We're going to stick to that, but I got to refine it. And I got to give him like a cowboy hat, and we got to do like a whole ad for that shit. That'll be great. It's nasty. So T.I., like, I gotta get on my bochinche today. T.I. and Tiny have been accused of some very egregious accusations. And damn, did I say accused and accusations in the same sentence? So they've been doing some McNasty things. And you know what? I don't judge them for what they was doing. The only issue that came about this whole situation with T.I. and Tiny was that there was a 16-year-old involved that was being drugged and forced to have sex with and stuff like that. It's fucking nasty. It's not okay. I don't understand why anybody would even want to do that with a child. I'm not tripping like they were like, oh, they were having orgies and they was doing drugs. That doesn't bother me. Like, you could do what you want in your house, but not with no baby. Like, she's 16. What's wrong with you? Like, that's nasty. If it's true, that's nasty. So this is all alleged, by the way. Let me not put that out there. They have released a statement saying that it's all bullshit and they've been dealing with this young lady for the past 10 years and they've had this problem with her, I guess, just going back and forth. Now, who's to say that they're not nasty in the bedroom? Like, I don't think that's an issue. Orgies and threesomes, cool, man. Fuck it. Me and my girl bring over girls, but we ain't drugging them. Like, one of the girls said that T.I. said, you got to take this Molly before you come in my house. Like, you got to be high in my house. That's wild, bruh. One of the accusers said that she got hit with money and had welts on her body from getting hit with money. Like, it sounds like some real freaky shit that kind of got out of line, and maybe they pushed their boundaries, but it sounds consensual. Like I said, the only issue that I saw was that they, said it was a 16-year-old. That's R. Kelly shit. You know what I'm saying? We're not okay with that. Now, there's something to be said when people, he expeditiously makes me look at him fucking funny. T.I. is one of those guys that he thinks he knows a lot, but he don't know shit. And it's great to watch how he maneuvers because he moves so sloppy. And from the gun case to, like, how you get caught with the guns, get a year and skate, then they get caught with the pills and skate. And it's like, either you have a really good relationship with your attorney and all the people in Atlanta, or something's good. I'm not accusing of snitching. I'm just saying it looks away. Can we agree that it looks away? How did you get away with, 14 guns or some shit with silencers and all types of shit and just get a year and come home? Like, what? All right, cool. I mean, what do I know, right? Maybe that's normal, right? Maybe that's Atlanta protocol. Okay, that don't bother me. Then he made that song, It Ain't Tricking If You Got It. And that's when I knew something was up. Because yes, it is. But that's okay. I mean, when you got to pay for attention, you should really just reevaluate your life. Like, if you want to take care of a woman by taking her out and spending some money on her, do it because you want to, not because you want her attention in that way. If you can't hold somebody's attention, you need to, like, really look at yourself in the mirror. Go read a book and develop a personality. Like, I don't mind spending money on women. I'm not spending money on women to spend time with me. That is weird. I don't need that. I'm good. And who likes to be around broke women? I'm straight. I like to eat good. Very expensive. I expect you to be able to foot your own fucking bill. I don't know you like that, but that's just me. But who's to say that that's what we're going to do? You know what I'm saying? It's that's always, I don't know, that mentality of paying people to be with you is strange. Not my cup of joe. You know what I'm saying? It really isn't. Speaking of cup of joe, this cup right here, this can right here is pretty delicioso. It ain't bad. It's actually it is very good. Diablo, café bustelo. I gotta say it again. Oye, si están viendo esto, mira, manda el cheque aquí a la casa. Yo estoy aquí esperando. Estamos aquí en quarantine todavía. So manda ese cheque. Que Biden no ha mandado nada. Uh, back to the show. The oh man, I don't know. I don't know if I'm upset at Ti for all that crazy shit that they did in the bed. Like that's cool. Like I'm go ahead, do all that nasty shit, do your thing. Uh, is it gonna go good or go bad for them? Like what's gonna happen? Is it gonna fuck up their legacy? This, that, and the third. Like I don't think so. Any couple that's out there fucking and doing what they doing the way they do it, I don't see it as a bad thing. The age thing is an issue. The accusations just sound like a bunch of people that are bitter, and there was a couple threads of women saying that they had STDs, and a few of them are out here in Vegas. Did I say we was live from Las Vegas? Surprise, we're live in Las Vegas, and there's a few that said they don't want to be named. I'm not gonna bring up those tweets. I'm not reading none of that shit. I'm just here to tell you that Ti and Tiny are doing some nasty, nasty things, and it ain't really that nasty. We spoke on Clubhouse. I talked about Clubhouse and how all right. So I think Clubhouse is a good app. I don't have any like gripes about it. I just feel like maybe the your audience base isn't exactly what they expected it to be. That's just me. Maybe it's because I don't follow the right rooms and I don't understand how to work it. I don't care for it. I tried. I read books all day. I'm usually on the phone, so I can't really listen to people talking or at least not have the ability to be in and out of like a podcast or something while I make a phone call and vice versa. So I do like the app. Then they should be going public soon. I'm not really sure exactly how the investments are going to be working on that or what they're going to try to do. The beta version seems like it's working well. They've made changes since I've been on it since it started. They've made a couple changes, and it seems like they're about to roll out their main version of it. Now, I don't know if it's going to keep on being exclusive invite only. People are making burner accounts because as of right now, there's 1 million people on the app. People have started to make burner accounts because they don't want to be influential in certain rooms. When you go, so it's drop audio. There's certain rooms. Imagine like a Zoom conference, and all you hear is audio. You join the rooms. Just for those who don't know what Clubhouse is, there's categories and different room titles, and you would pick one that you like, maybe something that interests you. You would join the chat by sitting in the crowd and listening. Some rooms will bring random people to the stage. You can raise your hand and be brought to the stage, and meaning that you can speak. So if somebody brings you to the stage, you get to talk, and everybody gets to hear what you have to say. So it's a cool app. I mean, it works well. A lot of people gassed it up when it first was taking off. I think it launched in March. And the first thing that fucked me up about the app was when they said, is Kevin Hart really funny? There was a room called Is Kevin Hart Really Funny? Where all of Kevin's friends and then Kevin himself jumped in it and was like barking at people over the whole comment and shit. Like people really had an opportunity to go back and forth with Kevin Hart. I was like, wow, what world do we live in where you can argue down Kevin Hart over if he's funny or not? The multimillionaire, the successful guy, like that whole, like, damn, okay, Twitter's one thing, you tweet at somebody, but to have a physical conversation like, yo, Kevin, you ain't shit. And Kevin's like, what? Fuck you. And then you go, no, you, Kevin. Like, that whole idea is beyond me. Like, I don't even think that should be a thing. And why was Kevin Hart defending himself? I hate when Kevin does shit like that. But that was my first red flag. Second red flag with the app is the picture is like a musician with a guitar. It's a black musician with a guitar. And the owners of the app are two white dudes. So that right there was like, okay, I get it. Y'all, it's race baity. Like, I see what you want to do. And there's a lot of hip-hop heads in there. There's a lot of hip-hop rooms. Unfortunately, most of those rooms are just gossip rooms, and not really much is happening in there that I was impressed with. I haven't been in one room where I'm like, wow, I was so enlightened, and I walked away with more information than what I walked in with. With that being said, they have been evaluated at $1 billion. It's $1 billion app right now. They only have 1 million people on it. I don't know how they got that evaluation, because how do you monetize it? They're gonna have to either tax the people that use the app or the people that are making the money from the app. So like if you host rooms and you charge, I guess they're gonna have to take a cut either from the people that want to join the room or from the revenues that the creators are bringing in, because the app itself isn't making any money. Like, how are they supposed to sell ads in the middle of the room when you're talking? Are they gonna cut off all the conversations to just like run a fucking random ad? Like, everybody stop talking, listen to this 5 or 15 second ad. I don't know. And I am a firm believer in not giving away free information on somebody else's platform. And free information as like an IP, intellectual property. It's a big deal to give away ideas and not get paid for them. So when you sit on somebody's app and you're just mind you, they record your conversations. They're using voice recognition. The computers are very, very smart. These algorithms are just collecting information. And it seems that the hip hop community has ran over there and they're just giving the shit away. You know what I'm saying? Like, the app gets better and better because everybody just keeps coming and giving away information. And it's not really good for musicians, but it's been sparking off how many artists have gone in the Clubhouse and kind of resurrected their career. But guess what? Your music is still trash and we don't really want to hear from you. You've just become popular on an app that, yeah, it has a lot of people on it, but it doesn't change the trajectory of where you're going. Like, it's just become it's like Twitter. When Twitter first popped off, everybody wanted to be, king shit and get all the retweets. And in this fashion, everybody wants to be in the certain rooms, and it's not working the way that I think it was supposed to work. And I don't see how we're supposed to capitalize off of something that we didn't make again. Like, Joe Budden came out and said that he wanted to be a part of the investors, and it doesn't look like they're going to let regular people invest. And if you can invest, it's going to be in the millions of dollars. They're not even going to like allow little people to jump in now and fund it. You can crowdfund it and make it big. With that being said, what is the goal? What are they aiming for? What is the strategy, if not to let the people that built the app up? Like, if it wasn't for Joe Budden, I don't think anybody would know what the fuck it is. He really blew that app up, and he's on there all the time, talking 6-7 hours a day. He's giving away the Joe Budden podcast every day. Like, it's really crazy. I don't know. It's funny to see how the whole hip hop community, how every entrepreneur, every business I mean, I was in a room, Grant Cardone, shit, it was probably like $10 billion in the room. But Grant Cardone was in there and the guy was asking him questions. He's like, I ain't gonna answer shit. I'm here to listen. That to me blew me away. That Grant was like, no, there's no monetization in here. I'm just here to listen. He was just being witness to what was happening. And it's just a bunch of people giving away free information that's being used. And the people that are using it, they have the funds to do it. Like, I don't know. I wish I had a better example of what the app can do and what it will do, because I've seen some great things, but I just feel like it's not going to be worth the money they're making it seem. I can't see how it's going to replace Twitter and Facebook. Like, I think we're at a point where we need to change our apps, but I don't see how that's going to change. Them being, not friendly to the people that really popped them off is kind of disheartening. Like, you would want to see an app like that join with the grassroots. It'd be nice, right, to see an app that's going to be a mega conglomerate to scoop up its first million people and say, hey, we're going to sell shares to y'all at X amount. Why isn't that a thing? Like, I think that'd be great. And as a app, they're using your phone number, they use your full name, et cetera, et cetera. So burner accounts, I would hope, wouldn't be a thing, but I've already seen how they do it, and they're smart. Boy, they come up with different ways to do shit. Pay attention to Clubhouse. I still say you should invest in it. I think it's going to be a great investment because it's going to blow, but I just don't know how they're going to do it or how they're going to monetize. So is it worth investing? Yes. Is it worth using? Maybe. We'll see. I don't like the idea of them recording conversations and then, it being used for nefarious reasons, especially if it's a good idea. Like, I know you want to get your idea out. You're so excited and then somebody steals your idea. Like, that's a shit feeling. And there's really you have no protection. It's their app. You have to do what they say. You agree to the terms. I'd rather be an investor on the outside than be on the inside giving away, tons of IP for free. It's just I have a problem with free. Like we're building the app because without creators, your app ain't shit. You know what I'm saying? Like if people didn't upload to YouTube, YouTube wouldn't exist. If we didn't use iTunes, nobody would listen to streaming on that app. Shit like that. Unfortunately, most of these apps are tied into our everyday life, so we're stuck using them for business or what have you. Clubhouse, I don't see how Clubhouse ties into that. Like it's a talking app. You have to keep headphones on or you have to sit by your phone. So yeah, if you're in your office, you're at home. Like the quarantine boosted it. I don't think damn, you can't even say that because we really can't just make shit up. But let's say we weren't locked down and everything was open. I don't see how Clubhouse would have took off, and I don't see how it'd be worth $100 million. Like that's or $1 billion. Yeah, $100 million. $1 billion is crazy. That's a lot of fucking money, especially for an app that's just been around for a year. That's nuts. I mean, to get that evaluation, and then what are they gonna do? Sell it to who? To what? Why? Oh man, so many questions. That's another episode. I might have to get a tech guy in here to explain how these companies are monetizing information, because information is the new gold. And if you didn't know that, well, you're late. But information is definitely the new gold. So we have somebody calling in. Let me see if he's ready. And he's going to talk to us about investments and what's going on with GameStop. This whole GameStop stuff is dope. Like I said, I love when it's like the little guy against the giants, and that's literally what's happening. And there's so many things that went wrong, and it's great to see. All right, hold on. Hello? Hold on, I don't think we can hear you. There you go. Can you hear me?
Yeah, I can hear you.
Awesome, man.
Am I
Can
good?
yeah, you sound great, man. Can you introduce yourself, tell everybody your name and what you do?
So my name is Demario McCowan, and among other things, I'm a real estate agent, an investor, and I recently started a brand to kind of teach people what high school and college don't teach people in regards to finances. Straight, straight tips for nothing like a college accounting class or anything. The real deal. You know what I'm saying?
Nice.
I do a lot of investing in real estate and stocks as well.
Are you into crypto?
Um, Honestly, I got in at the end. I think I'm somebody that's looking more towards assets. So what I help people get is stocks, bonds, real estate, gold, stuff like that. Cryptocurrency to me is almost like what's going on and what we're going to be talking about today. It's definitely a big gamble. I own some cryptocurrency. I do think it could pay off well, but I think that should be left to people that are a little bit more seasoned.
Yeah, it's tough. It's tough. I saw a lot of people jump into the whole Bitcoin craze and then pull out because they didn't know what was going on, and you can see that in the fluctuation in pricing. Um,
Yeah.
it's not
Hmm.
bad though because it's still up. I mean, if you look back at where it was, they're not doing too bad. But yeah, the whole crypto thing, I think we have a long way to go, and crypto, you know what really bothers me about crypto? I hate that you have to use money to purchase it. I feel like that is an oxymoron, especially because money is going to lose so much value. There's no value in the dollar bill. Like we're not backing it, and
Exactly.
we're just printing up money, and it's hard for me to just throw a lot of money into something where you go, yeah, it's there, but it's not. Like, I'm more of a real estate
There's
guy.
no actual value. Yeah,
Yeah,
there's no actual value. It's that's what people are like, hey, should I invest in crypto? I have a lot of people that contact me, and I'm my biggest investments out of the 200K that I have invested right now is in real estate and gold, because those are tangible. You need houses to live in, and gold can be used for many different avenues.
right.
Cryptocurrency doesn't have that yet. There's no, it doesn't have that. It's like the only reason why the price is going up is because somebody else bought.
Right. Yeah, it's not real value. It's all inflated. Yeah, it's scary
Hmm.
because a lot of people are
Hmm.
dumping a lot of their money into it. Um, I actually have another agent calling in after you, and we were going to talk about the market here in Vegas because it's an interesting market right now. As an investor, would you tell people right now to invest in Vegas or to wait?
And so here's the thing. I'm 23 now, right? So when the last big crash that we had, I
Mm-hmm.
watched my aunt and uncle lose all their houses. And the reason why they lost all their houses was because they were taking money out of their existing house and basically borrowing more money each time to get these homes.
Right.
Now, everybody lost their jobs and they didn't have good renters. But what they fundamentally lacked was that they didn't have any cash, right? It
Right.
was just all on credit. So they couldn't see it for the long term. Do I think people can buy now? Yes, because the interest rates are low. And that's what most people are looking on. Okay. So yeah, you can buy now. But the big thing people have to understand is if you're gonna do that, whether it's an investment or to live in it, people have to understand that once the market corrects, which it is, that not to lose their house and to make sure that they're accounting into that because a if you're on unemployment, they're not going to lend to you, right?
Right.
B if you lose your job next year and your house value drops, a good amount of people go, oh shit, well my value of my home dropped, so I don't want to pay the mortgage anymore, and then
Right.
they lose in the end.
And it's more
So the
detrimental to
big
the market too to let houses go that way. It's so much easier if you just put it up
exactly
for sale and just keep it clean and why ruin the neighborhood? I always feel like, the repercussions of letting houses go is so much more detrimental at the end.
and it's not worth it, right? Because you can short sell it. There's so many investors right now. These big guys that are buying up property, they're buying throughout. They buy all the time.
Right.
Now, people are losing their houses, right? And this eviction moratorium going on, which that's a big thing right there. Everybody right now, they're not supposed to be doing evictions. So once they list that, that right there is going to be a mass drop in pricing from what I'm looking at because of how many people are going to lose their homes.
Yeah, it's I think 250,000. It's up there. And that one's
Yeah.
weird because I feel like we're gonna have a huge influx in refis and um, loan modifications. I mean, I don't even know. I think we might have to have like a whole new loan rolled out just for Corona.
Yeah. At this point, it's like they're doing things the same as well as the stock market. They're doing things because they don't want what happened in 2008 to happen. But once it happens, like you talked about the value of the dollar, that right there, I think that's going to be what essentially happens. And that's going to be unknown to us because it's going to wipe out, you know, most of the assets, including home mortgages. The interest rate right now is so low
Yeah,
that the
it's
banks
free
aren't going to
money.
be making anything. Yeah,
Yeah. This is a great time. I mean, if you are in a position to invest, I mean, I think it's a great time. Money being so cheap, this is the best time to have leverage. Good credit is so important at a
hmm
time like this. I always tell my clients, you should always monitor your credit and stay on top of it and just keep it healthy. Having a nice, healthy credit score is very, very, very powerful. In a time like this, oh my God. Loans, I mean, how long do you think we're going to have these low rates? The next 4 years, or you think it'll change in between?
They're not even supposed to be looking at even doing anything with the interest rates for the next few years
Right.
because they just can't. They need right now, like the housing market, the demand is so high, and that big part of that is because the inventory is so low, and that's creating this like all the sellers are going to win. Like if you sold your house right now, I sold my house and made some money because the values are up for so high.
Right.
But again, for people that are buying, they just have to understand, hey, if you have a good job and you have good credit right now, I think it's fine time to buy. But just understand, your housing value may drop, and
Right.
not to let your loan close out and foreclose or anything like that.
Right. Oh, and that's another thing too, right? We don't even know what type of correction we're gonna have. Is it gonna be a steep correction? Will it be a slow correction? I mean, it could be overnight. We could wake up and they go, "Hey, this is what's happening. We're gonna release all the foreclosures. We're gonna release." I just don't see it being like a mass rollout of evictions and foreclosures. I feel like the government at this point they really have to do something that mitigates that and doesn't leave the owners to bear basically, I mean, the whole brunt of this. It's not really affecting the renters and the the small homeowners. It's the guys in the middle that own 2 and 3 properties that are not getting rent, or the apartment complexes. Like, somebody has to foot that bill. And I believe that, we always talk about the renter, but the owner on the back end right now has got to be hurting. It's got to be bad.
Exactly. And more foreclosures for homeowners pits renters in lieu in a system of, okay, am I allowed to stay here? Especially if they're
Oh,
not
man.
even paying rent.
Squatting.
So it's just,
And
yeah.
what a
And
mess.
that's what they don't want to happen. So they're like, after the election, they're like, okay, now we're going to sit here and figure this out, but let's keep pushing it, because they know they can't let all these people, be homeless or be evicted. But
Right.
another thing is, a lot of renters aren't paying the rent that they have, all the unemployment. They're not paying the homeowners. So I think it's going to be, I don't think it's going to be a fast thing. And that's what I'm worried about, is it's going to be a slow process of like,
Right.
oh no, we think everything's fine because the housing market's up, the stock market's going crazy, people are making money. Yeah, they are, but our money's being devalued every
Bingo.
single every
Well,
day.
as of right now, the new administration is talking about spending another $6 trillion just to boost the economy, and I feel like that's going to be so much more detrimental, especially losing jobs. Like, we have man, it's going to be a uphill battle for the next couple months while the new administration gets settled in and we figure out how to get out of this crisis. So it definitely is a seller's market, and as an investor, you say invest in real estate, and of course, everybody's been home, so everybody's investing. Everybody's using Robinhood. They're using Cash App. Do you recommend new investors uh, to take a chance and use a Robinhood or use a Cash App, or would you recommend sitting down with a professional and developing a legitimate portfolio?
Well, here's what I think. I think people should look at a couple things. Like, why am I investing, right? Most people don't even realize why they want to invest.
Right.
And that's the thing. There's certain attributes like being disciplined when you invest. So like right now, I think I wouldn't tell any investor that's new to go like download Robinhood and go buy any of the stocks that we'll talk about, because it's just way too volatile. The point to invest your money is the money that you saved, you want it to make more money.
Right.
Right. And it's just like, if I went to somebody and bought a gold coin from them and they have no experience in that, I'm going to lose money. So I think people have to be realistic with themselves. Like, hey, I don't even know how to buy stock.
Bingo.
So I think like Robinhood, honestly, after what they did, I never liked Robinhood personally, because the interface that they use is like a gaming interface, right? They want people on their app longer, right?
Yep.
Longer and longer, like a game.
Yeah.
And the reality is, it's not. Like,
yeah, it shouldn't be so. Yeah, every time you buy a stock, the confetti pops off. Like, yeah, it's a bit childish, and it should be more informative, especially with something like investments. I tell people don't save. I don't believe in savings. I believe you should have 6 to 9 months worth of savings. Everything else you should invest. Your money should be making you money at all times, and be diversified. Now, if somebody comes to you and they say, "Listen, I have $10,000. I don't know what to do with this 10,000." Where would you guide? For example, I come to you and say, "Hey, listen, I have a little extra cash. I've been doing kind of, I've closed a couple houses this month. I'm caught up on my debt, and I want to invest this 10K." Would you tell somebody to take their 10K and invest in real estate, something tangible, or would you say, "Hey, let's put you in the stock game and show you the long term game?" Because that's another thing people don't seem to understand with stocks, is that it does take years. This should not, you're not looking for a quick return. So I guess my question would be, would you slow trickle that 10K in, or would you rather say, you know what, take the 10K, be aggressive, throw it in here, and this is where you want to incubate your money for the next 12 to 24 months?
Okay. So now, obviously, it all has to do with people's age and goals. So let's say somebody around my age, right, 20 to 23, if they have that money, to lose, right? Don't invest anything you can't lose in any market, anywhere, at any time, because that's not how it works. Okay. So I would tell them, I believe in being diversified right off the bat. So to me, I would tell them maybe buy a couple $1,000s worth of stocks, because that stocks are the riskiest, right? They're not being like mutual funds are something that's going to be managed by somebody else. Stocks aren't. You buy it, and if you buy the wrong stock, then you buy the wrong stock.
Right.
So I think buying homes is still one of the best things, and it all depends on the person. But I think maybe $1,000, $2,000 out of the money they have to invest, I would invest in stocks, because it can grow over 5 years or 3 years. That is, because that's the riskiest. Other than that, I would tell people to, maybe at least 2,000, buy some actual gold, tangible gold.
Yeah.
That preserves your wealth.
Right. And gold right now, I haven't checked on gold, but I mean, gold seems to be just holding steady. Gold is not doing bad at all.
Yeah, it's holding steady. I think around last time I checked, I'm actually gonna buy some more soon, around 1850.
I tried to get on this GameStop. I ain't gonna lie. I tried to jump in on the GameStop, and then yesterday I realized they shut it down. I was like, "What the fuck?" I was trying to throw some bread at it just to double it real quick, which is it's irresponsible to even say something like that, because people that don't understand, it's a risk.
Yeah.
You could really turn a profit though if you do it right. And I don't recommend day trading for novice, nor should you even attempt it on your own. Have a professional sit down with you and help you with day trading. That is not. You will go broke. It's just as bad as gambling.
Exactly, and a lot of it has to do with when you just start trading, you don't people don't understand. It all has to do with our minds, right?
Right.
Because if we think, okay, we have to sell, you look at all the analytics of the side, but most people aren't doing that. They're just like, hey, I think it's going to go up to $100, and it's like, well, like AMC was going bankrupt. So for somebody to think $3 because it's a cheap stock, most people buy cheap stocks.
Right.
Like, okay, well, probably go to $100 a day. No, there's companies that close out and you have $0. And
Right.
I'm seeing this more and more around social media and stuff right now. People getting invested in stocks. I would stay away from Robinhood. What they did, what we'll get into is obviously not okay. But just beyond that, they don't have that much information on their site compared to like Fidelity. I like Fidelity because it's more of a, it's a bank, and they have very knowledgeable people that you can call, customer service. They have Facebook groups with all these guys that buy many different investments, including stocks, and some safer ones like ETFs, which are funds of a bunch of stocks.
And can you buy stocks on there the same way you would on Robinhood with such low margins? Because I mean, buying penny stocks, literally spending $1 and buying some shares is ridiculous. Well, whatever you could afford out of that small amount. Like Cash App, with just $1, you can own, whatever percentage of a share. Is that something you could do on that app?
Fractional shares. Cash App, like that owning a fraction of a share, I would still say like Cash App would be good. But to own an actual share, there's many companies that have stocks that are $1, $10, $3. I own some myself, and you can do that on Fidelity. Webull's also, if somebody had to choose between Robinhood and Webull, Webull's also another good one. You could buy all different types of stocks as far as pricing wise. Now, like, compared to Robinhood, the reason why I don't like Robinhood is like we said, it's immature in my point of view. And there's so many, that's kind of like the app for the amateur investor.
Right.
Just because it looks easy, it seems easy. Honestly, I get on Robinhood and I don't know what I'm doing compared to like Fidelity.
I agree. I think it's just, like I said, it is very childish. I mean, they make it real whimsical, and I think you shouldn't make something so serious. I mean, I get what the purpose is. I mean, I'm not mad at them for it. Probably more for research purposes, like maybe like something high school kids could play with just to get used to it, but not adults. I think that you should have at least give us a feature you could turn that dumb shit off. Like, don't celebrate my face for spending money. Don't do that. Like, I'm an adult. Like, that shit ain't funny to me. So let's talk about these short sales. A lot of companies did go belly up because of Corona. And unfortunately, we've seen small businesses take the biggest hit. And most small businesses won't recover. We have to protect. I'm a capitalist, and I understand why we're protecting these giant companies. They do provide more work than the small businesses can. So I am for helping the bigger businesses because we need them to keep this thing moving. companies like AMC, GameStop, and I believe it was BlackBerry was the other. BlackBerry's going bonkers. These companies are failing. They're giants, or they were giants. They're dwindling away now. And the idea that companies take these giant shorts, I don't think the short is the bad thing. And maybe could you give I don't know, a fifth grade version of what a short is, and maybe explain that to the crowd, to the audience? Excuse me.
Okay, so I'll explain it in this manner. Okay, so say I wanted to go buy some stock, and we'll say one share of the stock sells for $30, right? So what I'm going to do is, with my brokerage, which would be Fidelity, I would borrow a share from them at the $30 price. Now, when you do this, this is a big thing. You are basically, when you short, you're paying interest. And I'll get to that at the end. So the share I bought at $30. My hope is it goes down, right?
Right.
And if it goes down to $5, then what I do is I buy the share at $5 and return the other share. And I get $25 profit minus the brokerage fees, which again, that's where you'd be paying the interest.
And this is
So
standard practice, right?
Yeah, so it's a normal thing. Like most people that are novice investors, they're not going to do it. A lot of this are hedge companies,
Right.
investor companies that do this because they already know, like, hey, I mean, all of us can see no one's going to the movie theaters right now. Let's go on AMC, and we think they're going to go bankrupt, which they were.
They're
right?
up so much right now. I'm on their ticker. Jesus Christ, man. I can't even believe these are real numbers. 53%. Like, yo, AMC is. Oh, man. Yeah. This is nuts. Okay, so here's the question. Here's the question when it comes to these companies bubbling up. Just a sidebar. When these companies do go up in value, what's the effect on the market when so many shorts have been taken against them?
Okay, so now let's do it another way. So I bought the stock for transfer of hands, and that means, so if everybody that's listening, we all shorted one stock, that's not a big deal.
Right.
Now imagine 10,000 people are shorting a stock. The problem becomes is every time a stock gets bought, it typically starts going up, similar to Bitcoin. So it's going up and up. Now we all have to cash out. Now the stock starts to go up. Now we're getting scared. And if I'm more of a, how do you say, like a reactional investor, I'm going to jump out, boom,
Right.
and cut my losses at, if I said $30, if I bought at $30, I'm going to cut my losses at $25. Now what happened with GameStop is, and this is what the short squeeze is, the investors were literally tripping over themselves to hurry up and get out of their positions. So they had to buy, remember, they borrowed the stock at $20.
Right.
And it started going up. So they're like, okay, I'm going to get out at 25. So they had to buy that share. And when they buy that share, that drives the price up. So the reason why GameStop's value kept going up and up is because people were jumping out of their short positions and buying to cut their losses early.
Which was causing it to grow even more on top of everybody buying into it already.
Exactly. So while they were doing that, you have people on Reddit that are fueling the fire and pushing the price up more, so making people have to sell. And secondly, imagine the people that weren't watching. Not all investors sit at their screen. They got to their screen later and realized, hey, you got to sell. Now they're doing mass buys because they have to get out their short positions.
Right. And it jumped up from $40 to $280 in a week. Those are massive losses.
Exactly.
It was $78 billion in losses for the hedge funds. Or no, $82 billion, excuse me.
They had to go over. Some of those companies are done. Their reputation is going to be done. Because the thing with shorting is, and we can short stocks. The thing is, you can lose an infinite number of money essentially, because think about it, when they bought it for $30 or $20, or they bought it a little bit lower, it's probably like $15 or something, because that's when it started. People started selling at 20. they got out their
20
position.
triggered them to start
Um,
selling. Well, it was $4 last
yeah,
summer, so anything over the $4 mark, which is fucking crazy. And if you had the stock at $4, you are, what was that kid? He had $50,000 on Friday, and he woke up to 50 million on Monday because of GameStop. The
hmm
numbers are astronomical.
and then think about the other way when you're shorting. People that are like, okay,
You got to
it's
fund.
$4. We think we're gonna go to $2. They're funding it the entire way, and that's a big reason why like people were mad at Robinhood. And I think what Robinhood did is in their own for their own benefit, but Robinhood would have been bankrupt
Well, what
because
gives them the right to stop us from using our? Well, on top of it, excuse me, it wasn't just Robinhood. It was a few apps that stopped all trading, which isn't right. It's a free
yeah,
market,
yeah,
and
right.
their owner Citadel, they said they might have had a hand in this, and that they're willing to take the hit from the FCC, or is it the FCC or FCA, whoever the fuck it is.
SEC.
Okay, so the FCC said, there may be implications for what happened, because it seems like, because that's manipulation. When you stop it
It
from
is.
when you shut down the ability to even trade, once you can't close that box. This Pandora's box. Once it's open, you got to leave it open. So for them to even manipulate the market in that fashion, the lawsuits have to be getting like, I don't I don't know if I blame Robinhood or if I blame their parent company, because I feel like it was pressure from the parent company. Because the kids that made their money, they left. They took their shit and ran.
They got out.
They got
They
out.
won. That's it.
And they're not gonna come
and
back. The guy that made 50 million, he took his 50 and ran. There's no reason for him to even return to the market. He's a young guy. They said he ain't never hit it like this before. So it's phenomenal to think that there's gonna be a couple people that make way with it. But these giant companies that are taking this hit, what's the this a lot of people don't realize their 401ks are involved in something like this. Um, what would the implications on a 401k be because of this, or if any?
okay, well, so 401k has obviously most people that have them. You guys actually may not know because sometimes you just sign the paper and they invest your money.
Right.
401k, they invest your money in many different things, in mutual funds, index funds. And again, if there's a fund that had a bunch of shares of GameStop, yeah, it would be affected. Like the kid that made 50 million, like people lost 50 million. Like every winner, there's a loser in this
Right.
game. And that's what I think people are understanding. Like, yeah, like let's kill the hedge company, like let's fuck the hedge companies. And it's like they go bankrupt, people lose their jobs, right?
Because the hedge
Same thing
company's
with
money,
Robinhood.
the hedge fund's money comes from massive amounts of 401ks and other investors
Exactly.
that affect the little guy without even knowing. Because like you said, they might have just signed the paper and said, "All right, I'm good," and that's not how things should be done. Unfortunately, it is.
And that's how even employers that pick people's money in 401k, they don't even know what they're talking about because it's just a benefit for them. They're not investors. They just say, hey, this will make you money. And you're right. That's when the big companies go bankrupt, the people lose. The companies rarely lose. Bank could go bankrupt and we'll all lose.
Right.
They won't, right? They rather go to jail. That's why people look at it. Robinhood was willing to basically blur the lines of what they should be doing, stop trading, lose all of the people that are on the app that gave 1-star reviews now, and take a SEC hit instead of possibly going bankrupt. So that just shows the magnitude. The SEC is going to find them, and what they'll do is they'll just pay it.
And
they would have lost a lot more if they didn't.
Really? So if they would have stayed open, they would have kept on, because it opened back up today and it's through the roof again. If they would have left it open yesterday, it probably would have been the biggest trading day in the history again. They would have beat the day before, because the day before, if people don't realize, that was the highest trading day in the history of Wall Street. It was a pretty. I mean, damn, I think it beat the highest day by tenfold. It's ridiculous how many people were out there really moving things. And it's not just GameStop, but GameStop was the biggest one, because it's just the irony that it went from something so little to so big is it's fucking crazy. These numbers that they're throwing out there are ridiculous. It's like 1,700% over right now. Like, what? Like, this is ridiculous.
Right, and that's not Like that's people. We want those gains when we invest, but the reality is, when you see something like that, that's danger.
Oh
Because for
yeah.
every, like I said, every winner that made 1,700%, these people that lost because they didn't get out. AMC, I was in on that, and this is what happened, right? So I'm in on it, and I don't usually day trade anymore. I don't actually like doing it just because it's tax wise. People, again, you guys have to pay taxes on all your capital gains. Anything that you make profit wise, you're gonna have to pay taxes later. It's a lot, tax wise. But I got in and I played it a little bit, and then I'm getting all these calls and text messages that people are shut out in the morning. Like, I can't buy, I can't sell on Robinhood. What Robinhood did, because they have most of the amateur users, like the novice investors, right?
Right.
They said, okay, we're going to shut it down. These people aren't going to know what they're doing, and we'll be fine. Fidelity was still open. I was good.
Yeah, if
But
you
I've
had a
seen the
broker, you were
number.
good.
Yeah, I've seen the number go from 400 million yesterday, the day before yesterday actually, to the next day to be 60 million,
Yeah.
which
Yeah.
is like almost 10%. And I said, okay, something's wrong, because this was actually expected to shoot up more than it has. AMC,
Right.
it's at $13.26, but it dipped because all people could do on Robinhood was sell. No one could buy.
Yep. And that's
So the
manipulation,
price can't
which is
go up.
against the law.
Exactly.
And that's the real problem too, because they took our ability to invest, and that just shows the bias in Wall Street and how these giant conglomerates come together. And just like you said, they can't fail. These businesses, they're global. So honestly, if they fail in one market, they still have so many more to rely on. They live with multiple streams of income, and it's way above many of our pay grades how much money they maneuver.
Mm-hmm.
And
Mm-hmm.
stocks is dangerous. Is it something I recommend? Hell yeah, I think everybody should take their chance and listen. Your money's losing value every day. You might as well make something of it because you're going broke.
Mm-hmm.
Don't let it sit in the bank. It's not worth the fuck. Don't believe the
Mm-hmm.
hype that you're gonna get some type of that 0.1% or whatever the fuck the bank gives you every 2 years. Like, yeah, no thanks. Get that
Yeah,
going.
people should actually look at that. This is key. Like, this is all speculative because everybody's social media and the news and all that shit. They want us to look here, right? But people should understand, like you're saying, is the value of the dollar is going down. And as simple as this: when you go open a savings account up, if you look at that little percent you earn, they all say 0.0.01. Even if you invest $100,000 in one of those accounts, they dropped it. And the reason why they dropped it is because they don't want to give us anything right now.
Of course
They
not.
don't. Before if you put 100,000, you might get 1.00, and that's good, right? For what they think. But now everything's 0.01, and we can see like interest rates are dropping, and all this stuff is showing us that our value of our monies is going lower and lower. So if you can invest right now, I would tell people to invest in things that they already know, right? If you know baseball cards, surprising or not, you can invest in baseball cards and resell them. That market is doing good. I even sold some exotic sodas, which are Fantas from Bosnia. I bought for $3 and sold those for $20. And these unique things to make money that not everybody's looking at. Stocks are a good investment, but I caution people to at least know. I'm getting people that are calling me that have $3,000 in their stock account and they're buying stocks, but they don't even know how to place a trade.
Yeah, there's a gap in knowledge, which is it's frightening because I think this is something that should be basic. We should be able to do this easily because if we have a strong market, that also affects pricing in the market, meaning we get, cheaper amenities and things will be made at a quicker rate. Quality of life goes up if we knew how to work the market right. But honestly, shit, I don't even know if that'll ever happen now. Before it was speculative that it was ran, amongst them, but this shit was so blatant, and it was in our face, and they were like, "And so what? What you gonna do? Like, we're not afraid to take the
Nothing you
fine.
could do.
We'll pay this fine. We'll be all right. You can't afford this fine," which that's what's scary too.
Exactly, and that's why the investors have to have that understanding. Same thing if you're buying real estate. All it takes is a big development to come on next to you and say, "Well, we want to buy that." Well, I don't want to sell. You're gonna sell.
Oh
If
yeah.
it takes 5 years or 10 years, we're going to make it sell. And these companies do crazy stuff to make somebody sell their home. So that's why it's like it's very important to understand that investing is it's needed, and it is essentially a game. That's how it's played. Like at the top, they're going to manipulate the market because they don't want people climbing this ladder,
Oh
right?
yeah, yeah, yeah. They want to
And
keep it exclusive.
hmm and that's why they took this hit. Now I hope people see with the blatant disrespect that Robinhood did, and essentially illegal activities, that we have to have the more knowledge we have in investments or in anything that we do, the more leverage we have. We have zero leverage because the fact is, when you open an account up with one of these companies, they say in their thing, we have the right to close your trades. We have the right to do this. We have right. No one reads the terms and conditions,
Nope.
but they have the right to say, you know what, we're going to pause it right now. And they knew it was going to. The crazy thing is, the sad thing is, they knew it was going to like fuck everybody on both sides.
Okay, so let me ask you this. Even though they did manipulate and they did affect everything, do you think they saved us from us not knowing? Because we're dealing with powers that we don't understand, especially being the general public. Do you,
Mm-hmm.
I mean, would you say that they did it to protect us because we don't know what we're doing? Or it was just a blatant, we're not going to let you in and we'll do anything and everything we can to keep you out?
I think it's both. I think that they had vested. Most of these people have, you know, AMC was a smart play to short. Reality, GameStop was too. Most of these big companies have a lot of interest in them, but I do think a lot of people would have lost even more money. On the other hand, if they didn't do that, because they made it on Friday, like they started back up, but they made it where obviously you couldn't buy any more stocks. Here was the problem. Everybody on social media, people I never knew to invest, are talking about, hey, go buy this.
Yeah.
That right there, I think they realized, okay, power of the internet, we're going to have, 100,000, 200,000 people come buy stock, and they're going to lose because AMC and GameStop are realistically set to go down. And this is the problem. People are greedy, right? And
Mm-hmm.
people don't get out, and the stock plummets, and people lose that $1,000, and then they get mad and they go sue Robinhood. So I feel like Robinhood was put in a very, a bad situation, right? But
Definitely.
they should have this known that they're the app for novice investors, which they are, because they've been sued before many
Right.
times from the SEC in all this because of amateurs. But I think yes and no. I think they shouldn't have done it that way. I think it also lets people know, hey, we don't have the control here. Yeah, we can buy stock, but if our broker says they're going to stop it, then we're going to lose money.
Right.
To caution people to say, hey, should I really buy AMC stock? Like realistically, yeah, if you have $1,000 to throw in there, $100 to throw in there, and you didn't care because it could make you 1,000 or it could have lost it, that's fine, right? I would never tell someone that if they only had $1,000 to invest, because then
Of
I would tell
course.
them to do $10. But I think it did save a lot of people. I think also a lot of people shouldn't be using Robinhood, and they should be using apps like Fidelity, E-Trade. They can see, so that they give you all the information on one screen. They give you what the big guys say. They give you what the little guy says. There's groups, so we can bounce ideas off of each other.
Nice.
So I hope people realize, like, okay, Robinhood is probably not the best because they're the new guy on the block. If they wouldn't have done that, it would have been a lot worse. They would have been slapped with a lot more lawsuits because, there's a kid out there that pitched $20,000 in a GameStop or AMC and lost it and, killed himself or something. Boom, lawsuit against the broker that evening.
And that's touchy. In closing, what would you like to tell the audience? What should they look out for stock wise, or what investment advice could you give everyone?
So I would start with this. If you guys don't have emergency fund, if you don't have at least $1,000, a rainy day fund, I wouldn't invest $1 into anything. Have that
Good
investment
advice.
fund. I mean that emergency fund, because you don't want to use your savings because something happened to your car. You want to use that throwaway money, that $1,000. That's at least. And second, Yes, sir. Secondly, I think that people should look at what do they already know. Now, an asset is something that's going to produce you some sort of income, right? So I think there's a lot of people that are looking at stocks, but they know everything about baseball cards. So I would look other places than the stock market. And third, I think like gold. If you don't invest, I wouldn't tell you to go invest in real estate either. I would stick with like gold, um, maybe do some, some of the apps like Fidelity has a robo investor where you put your money in and it invests it for you.
Okay, nice.
Very short, very small fee. It's called robo advisor. I like that. That gives you some room to invest. It's doing it by itself while you can learn. And the biggest thing is everybody that wants to invest, I would not make any investment accounts without understanding how to even place a trade. You can go on YouTube. You can follow me at Elevate Now _. I talk a lot about little tricks on just getting started.
Nice.
But I definitely would stay away from AMC stock, BlackBerry, GameStop right now because it's just too risky. You don't want to jump in, lose all your money, and then never invest again. That's the real loss in this. Somebody lost $1,000 and is never going to invest again, or it's going to wait 20 years to invest.
Right, it's going to affect
because
in
of
the
that
long
loss.
term. Yeah. Well, I mean, stocks are they're a tricky game to play. Hey man, I want to say thank you for coming on. I appreciate you. We are both in real estate, and we obviously are both investors. So I do look forward to having you on the show more, and honestly, working some deals. It's gonna be a crazy year for real estate, and I think we'll be crossing paths a ton out here. Let's see. Great games. I think we can have a really good year here in Vegas, and I think you're on the right track to do a lot of good things, and I really hope that people were able to hear your words today and take something away from it. You did drop some gems. Again, thank you. Excuse me. Thank you for coming on, man. I would love to have you on again. Then give it your YouTube again. Make sure people heard that. Can you drop that one more time?
So my Instagram and my TikTok, where I'm at mainly at Elevate Now _. And DM me if you have any questions. And sounds good, and I'm glad to get to talk to you.
Yeah,
and,
I appreciate you.
Hit me up sometime, okay?
Always, man. Thank you so much. You have a good one.
Mm-hmm. You too. Bye.
Peace. That was dope. Remember, guys, this is just advice, so we don't want nobody jumping out the window. Yup. We got the real estate agent that's about to call in. I want to be able to bring more professionals to you guys. I don't want to just be the one preaching and giving you guys information. And when I say guys, please don't take it as anything. I don't mean it. Folks, I'm doing it for y'all, for the beautiful people. That's what we're here for. And this investing situation that's really going on. I mean, I noticed that Corona, the COVID-19 really caused a frenzy. And I don't want people to just jump out there without having the proper information. Real estate is definitely a tool for investing money. And as a realtor, I love speaking to other real estate agents. As a matter of fact, here he is. This Kasabian.
Yeah, Kasabian, it's Luis.
What's going on, my brother? How are you?
Well, yourself?
Hey, man, it's another beautiful day in Vegas. Can't complain.
Yes, it is.
Man, so, we just got done talking stocks and investments in real estate. You're an agent out here in Vegas. Can you give the people a little bit of your background, let them know what you do out here, where they can reach you, and then we'll start getting into the market.
Sounds great. So my name is Luis Carrillo. I'm with United Realty Group at the moment. This is my year number 5 in real estate. So I've worked from duplexes, single-family residential. I've done some land in Pahrump. So I've done a little bit of everything. The one thing real estate has taught me is no one's transaction is the same. Everyone's unique. Nothing's going to be identical. Some of the steps are the same, but for the most part, things change. So I've been very fortunate to work with investors, first-time home buyers, people who are retiring, a little bit of everything, even some foreclosures and some short sales. We don't tend to see a lot more of those, but the way things are going, we might have a lot more on our hands before we know it.
Let's talk about that. So the market right now is really tight. We have a really short inventory, and it's causing prices to be extremely high. It's definitely a seller's market. Would you agree?
Oh, very much so. Just for example, I do have some clients, VA. They have 50,000 in cash to put down on this property, and we had to compete with multiple offers and people offering way above asking. I wouldn't with the VA loan. Tech, it has to be at appraised value.
Right.
The bank, all loans will have to be at appraised value. With with the other ones, you can go out and renegotiate. Some lenders get a little iffy, especially with the market that we have today. And just last year, they tend to be a little more scared when we're paying above appraised value because they're paying more than what something is worth. And the only reason that is because they want the property because it's such low inventory.
Right.
In a normal market, that wouldn't even be an issue.
So I think the harder pill to swallow is that if you're looking as a first-time home buyer, you're going to pay a little more for a home that might not be worth that.
That's correct.
And that's going to be, hard on, any first-time home buyers or people that are trying to sell. Like, for example, I actually had to lose a deal because my client couldn't afford to upgrade. They wanted a bigger home, and their home was selling at a max price. We were at $360,000, but it wasn't enough for what they wanted to move out of. And now, I mean, their house is still worth the $360,000. Unfortunately, they're not going to be able to move. Like, they want a half-acre, 5-bedroom home. In Vegas right now, we're looking at probably $500,000 for something like that. They weren't under that impression. They said, "Oh, well, the market's falling apart because of COVID. We should be able to move quickly and sell our house for top dollar." And I explained to them right away, if you're selling for top dollar, you're buying for top dollar. That's just how it is. Would you recommend, I guess, is it a renter's market? Would you say rent, sell your home and rent? Would you say hold on? What advice would you give to a homeowner today?
And you know what? Everyone's situation is different. If they have the option to rent and it's, something that they can manage and it's in it for them, then it's worth it. It's only if they say, hey, the plan's a year and see where the market goes from here, but I'm cashing out an extra $15,000 in equity already, because let's say we price up the house competitively I would even put it, if the comps are, you said maxed out at 360. I'll even put it 355 and just sit here and create a small bidding war over the properties, because again, we were looking at homes under 300,000. If I wasn't mistaken, we were just shy of 500. It's such a small number.
Yeah.
Everything now is getting into the 300,000, 300 plus for a standard 3-bedroom, 2-home. If you want something built, at least in the 90s to this date, you want something. So that's what it's looking like. So if they say, hey, I'm going to take we got an extra 10, 15K from our property, we got great equity, and now that pays for at least a year of renting, sure. Because then in hindsight, if they didn't spend it, it's kind of like a wash.
Right.
But then if the market does stabilize and we do have these more foreclosures and these short sales coming up, that's where they're going to capitalize on that. Because then they could pivot with the money they earned in equity towards putting down the 20% on the additional property, or even just going in with the 5-10% and then using another 10% for a second property, things of that nature. That would be if that was a game plan. But again, none of us have this crystal ball. And I mean, if you guys were just talking stocks, I'm assuming everyone's talking about this GameStop and how the masses are, taking it to these hedge funds. So,
and it's
the same.
That's crazy that they're able to manipulate that market. When it comes to housing, we necessarily don't have those same situations. You couldn't really create that frenzy in the housing market. Would you recommend people to invest in a second home as a rental property? Or, well, obviously because of COVID, rentals are still going through the memorandum where they're not paying rent. And we don't know where that leads. Like in my office, we have meetings about this all the time. We have to calm our clients down. There's homeowners that have, 5, 6, 7 rentals and they're behind 4, 5, 6, 7 months, and that stacks up.
Very much so.
Those owners, they're losing their mind. They want to get out of debt. They want to, sell the house, which is going to cause a ripple effect. We're going to have evictions. We're going to have squatters. We're going to have damage done to the homes. What would you recommend to a person right now that's a renter, owner of a couple rental properties, and they come to you and they say, "Well, Luis, what do we do? we want to save our money. We're not trying to lose our money in this volatile market.
Yeah.
What do we do?
They worked hard. They worked hard for that investment. Most of these people, that's their retirement plan and their livelihood. They worked hard to create those, that second cash flow. So I would actually just tell them to be patient, because the one thing is, I've seen prices go up and down. We see that all the time. But one thing we see more and more is once rental prices are set, they usually don't go back down. Right. If someone's willing to, right now, you raise rents, a little bit. Once we get them evicted, you cut your loss, get the property move-in ready again, and get a new tenant in, and you raise the rent 5-10% to make up for what you lost for the year. And hopefully that the government does step in, and some of this money that they have that they're putting out for the people who have rental properties as income, have that there for them. I still haven't had it for my people to get paid on that, but that's what I would tell them. Like, look, just be patient, because if we can't get them out, if it's not vacant, we also can't sell it with them in it. If they're already not paying due to COVID, the eviction process is very time consuming, and
right.
it's so that's the thing. It's like it's tit for tat at this point on what to do. But the way I see it is, rents usually never tend to go down.
Right.
Home prices will fluctuate because the market will fluctuate. But if we set the rent rates now at, just in a decent area, the Southwest is the most expensive per square footage.
That's a fact.
A 3-bedroom, 2-home is running around, $1,400 to $1,500 a month.
Yep.
I used to rent a 2-bedroom condo, I want to say 6 years ago, for like $600. That same condo now is going for $1,100.
Yeah, it is. So, it's crazy. Yo.
So that's what I'm saying.
Yeah.
It's going to be one of those things that you're just like, hey, be patient. We're all riding this wave together.
Mm-hmm.
Even the people who are putting themselves in a situation where not paying, and we get not everyone's taking advantage of the situation. Some people really aren't back to work.
Right.
You know what? Casinos are. I was on the Strip earlier. I want to say, this weekend. I actually finally went to go check out Circa, and Circa was for a Friday night. It was like Vegas doesn't have COVID. We went to Circa, then we stopped by the Nugget because I wanted to stop by because the Chick-fil-A was there. I was like, I don't go normally, but just because it's just always out of my way because there's not one close by. But I was like, oh, there's one here, late night snack after some drinks, and I was just like, no, but it's, but at the same time, we're not 100%. How many of our, people who live in the valley depend on all these jobs?
Of course.
And how much things are changing from not having the tourists, from like just everything. It's taking a huge hit. So
right.
I know that not everyone's taking advantage of the system, but there are some who are.
And we spoke about the owners. Now, what about the owners that are living in the homes right now, and they're dealing with COVID, and they don't have any work, and they're afraid to lose their home. Have any options come across your desk? I know we've been talking in my office a lot about loan modifications. We've been talking about maybe the government is working on some type of balloon payment plan. Like, do you think a new loan will be unveiled to help with this whole COVID stress, or are we just going to do loan mods and balloon payments? And, will the loan mods hold up the market? Because are they going to change their standards for doing loan modification?
And again, excellent questions. I feel that me personally, as a capitalist, I don't like when government steps into free enterprise. That's first and foremost.
Facts.
But my second thing is, with banks, they know that they had the last bailout back in the last recession. If this were to happen again, it would be dumb if you say, hey, you know what, things are getting better. We understood that COVID did this to everyone. It's not something that you brought onto yourself. We're all going through this. It would be wise to just say, hey, we're going to keep your interest rate where it's at. Obviously, you can't refi, but we'll modify it. What's doing a determinant, and we're just going to go ahead and add those like they were doing back in 2008, but instead having a set price, I would say, a fixed rate where we're not going to have these balloon payments, because that's what killed a lot of people back then was,
right.
One day your interest rate was a 4, 2 months later, you're now at 11, your mortgage just almost doubled. Like, what do you do?
And are those loans still available real quickly? Are those loans still available as variable loans?
Honestly, I don't believe they are. Because of I think there was a case of predatory lending, and I don't believe they are. I want to say that I'm on the lending side. I'm not so well versed.
Me
I know a
neither.
little bit. I shadowed some lenders and kind of saw what they did, but I'm not 100% versed in the loan. I could get it started from front to back, but usually their inner workings from their underwriting to some other things that I'm not a privilege to,
Mm.
I couldn't tell you. But
Agree.
for the
Same.
most part, everything is fixed.
Right. Which I mean,
And I would
that. Go ahead.
go ahead. And I would advise anyone, how dire the situation would be. I would always advise against a balloon payment because you just never know. Right now, the rates are, the lowest you've ever seen. We've seen some of these things that every other month, like we see, like just something, a major historical event happens since the beginning of, last year. So now we would see. I would always advise, I would never take something that you don't know. Because even a credit card where their variable APR, one day they're giving you that 0%, and so they hook you, and then you're sitting here paying 28% a couple months down the line.
Right.
See, that's things because it's in our nature, right? It comes to that. For example, the iPhone says, "Hey, read our terms of service." What do? We say accept, and we want access to it now. A lot
Immediately.
of first time buyers don't sit down and ask questions. My thing is, there's no such thing as a dumb question.
Right.
I would much rather take a few minutes and explain it to you, and if I don't know it, let's find out together. Hey, well, what's this? Why do we have this in place? Everything is to protect the buyer, and right now it's actually protecting just everyone in general.
Right.
Because no one wants to feel. For most people, this purchase is the biggest purchase of their life.
Right.
You know,
And it's
most people you're spending. Go ahead.
yeah, and this is it's life changing. Some people they buy their first home and this creates a pocket of wealth they never knew that they had because they have leverage now. They didn't have leverage prior to buying a home, and opportunities start to open, and you have a plethora of options that honestly, as a renter, you will never even understand. They don't understand the tax write offs. They don't understand. Sometimes people don't realize you might be able to make so much money back from a great sale. Like if you buy a house at the right time, at the right, perfect sweet spot in the market where everything is going pretty good, you can walk away with a decent chunk of money, buy an even bigger home or smaller home, and live a life that you've always wanted because you took the chance, you got your credit right, and you were able to go out there and make a purchase that as scary as it is, because I think that's another thing that drives people away is the fear and maybe not knowing the process of buying a home. Most of my clients, we it's like holding their hand through the process, and it's not difficult. It's always it's like a parent moment. I'm a parent, so when I have a client that's just nervous or scared, it's fun because it's life changing. It really is. But when they look at a market like this, it's terrifying. Like they go, well, what are we gonna do? Rent keeps going up. Jobs are very scarce. Our leadership doesn't look like they're really doing much. Shit. How? What would you say to an agent today? That's a new agent. I'm 3 years in. You have 5 years in the game. What would you tell an agent that's just coming into the game? And wow, how brave are you to just jump into something that's so volatile? But what advice would you give them?
You know what? First and foremost, learn as much as you can, and don't be scared to make mistakes. But make mistakes as you. And when I say don't be scared to make mistakes, and I'm talking about when it comes to the business trend of marketing and growing your business, because technically we're independent contractors and we are small business owners in essence.
Right.
Don't be scared. It is risky, and no matter what, I talked to one of the lenders that was my preferred lender last year and 2 years ago as well, which great. He said, during the recession, I made more money than I did these last couple of years because this market was so great that when it's all this competition. So if you're going to be in it for the long haul, be ready to grind out years of this to get to a point. This isn't like any other business in this world. It doesn't happen overnight. It takes a lot.
Well, what they say, you got to work 10 years for it to happen overnight.
Yeah.
That's how overnight successes really happen. And as far
So,
as
like, I mean,
go ahead.
no, go ahead with your point. I was just gonna kind of jump on that too.
As far as new agents, I mean, I've come across a lot of people that think that the market's going to turn around and blow up like it did before because they did see the successes of what happened during the recession. If you looked at the market and looked at the numbers, everything went up. Even though we took that huge dip, even now that we're lower, we're still above the lowest point that we were at. You say grind it out. And I know it's discouraging, man. Cold calling is hard. I don't know if you can even knock on doors. I haven't gone door knocking since my first year in real estate. Cold calling is definitely something that I recommend. What are other facets that you would recommend new agents take? I always like encouraging new agents to just meet as many people as possible. But in this COVID effect of us not being able to have real contact, how have you adapted? What have you changed? You know, I started to use Popple as a digital business card to avoid handing out business cards and having people make the weird face because you don't even know how to introduce yourself anymore. We can't shake hands as agents. We're very friendly. You know, we're politicians. We walk in and we say hi to everybody. Like, I don't know about you, but I know everywhere I go, hey, hi, how are you? How's it going? You know, it's what we do. It's our job. How have you adapted to this environment that we're in now?
So one of the things that, even though during COVID was my most successful year, because beginning of the year, from beginning to end, we were just grinding it out. We went back to our roots, which was starting off with our spear. It's picking up your phone and going from your contact from A all the way down to Z or to the numbers that are in there and just calling everybody. I don't care if they bought, sold, whatever. You just make the conversation.
Right.
Always steer it. Get your training. First and foremost, I would suggest the first thing to do that started changing me and making me better was setting a schedule. That was the hardest part because you have all this freedom. And then it's like, okay, I know that even if we're not in the office, I know that I'm going to get up today and at 9 a.m. from this time, I'm going to call this many people. A text message. If you know what, this week I'm going to dedicate to write everyone just a small note, a handwritten note. I know it sounds old school and cheesy, but people don't get that anymore.
Right.
So you give them something different, and that's how you do it. This year, to adapt, not unfortunately, very fortunate for myself, I'm reaping a lot of the people that I had worked with the year before who didn't get to finish how they wanted to. So we're still working with them now. And reaching out to just friends and family. I used to be one of my biggest fears was asking family for business, because we always said never mix, business and family, because if my brother says, hey, let me borrow $20, I know that I just gave him 20, I'm never going to see that 20 back, or I don't expect it. So
Right.
it's hard because as you know, you're a small business, and it's almost that it became family, or is my family. They came to me and they would always see me as a kid, even though I'm 30-something now. They've known me my entire life, so they're just like, they trust me because we're family. But in their eyes, I'm still this kid.
Yeah.
So even though you have to sit there and have these conversations with them, and you're the educated and you're the professional one, it's hard. So that was one of my biggest obstacles to overcome. And also when it would come to set price, because you would tell them how much you're going to charge, and they're just like, what? And I was like, selling a home, it's the know-how and how to get this done, and the peace of mind that I'm giving you. It's, like you said, walking them through. It's just such a scary process for buyers, but for sellers, the same thing. Like, I mean, they have so much going on. So I was like, you're paying me to manage your process of this for you, because you don't know how to market or sell a property. So that was one of my biggest things. But now that I got comfortable with my skin, I've done good business with my family. They're just like, hey, they're actually starting to unload some of their rental properties, because we finally were able to, get we got one eviction done. We're working on another. And the only reason was because they were doing damage to the property.
Right. And that's going to become a thing again, too. People destroying. For some reason, renters love to ruin properties when they can't afford to pay it. It's such a weird phenomenon, but it does happen often.
You know what? If it's mine, it's a pride of ownership thing. Sure, there's a few owners who know it's their thing and might not care as much. But when you look at almost every community, when homeowners, they take pride in what they own, because it's a huge investment.
Of course.
Every month they're making that mortgage payment. So they're like, hey, I want to take care of this property. An AC unit, I told you it was like a new AC unit, thousands of dollars. You
Yeah.
know, kitchen, you know, little things like that. Plumbing. You don't realize that there will be costs to owning the home, but so people are like, man, go on YouTube. Sometimes you're gonna have to, you know, get a little handy with it if you don't want to come out of pocket. And as a
Yeah.
homeowner, you'll start to get little things. And if not, there's handyman and people who will obviously, you know, take care of things. But there is a cost at being a homeowner, but the reward is so much that
Right.
it's worth it. But with renters, they have no pride because it doesn't belong to them. So they're just like, well, I don't care. At this point, you know, they feel at times, you know, at the best, they feel like they're the victims. And I've noticed this because I put myself in a situation when I was renting. Um, they came in and they were the stove went out, and I was like, hey, you know what? The stove's not lighting. Blah blah. Okay, paid the trade call fee. They split it. They were like $35. They got fixed, but it was just a little repair job. And then 2 weeks later, it happened again. I'm like, hey man, whoever you know did this job, it just did a little patch job, and it's out again. I mean, and you're like, all right, here's another $35. And you're just like, so you're like, why do I care if I'm sitting here paying to get this fixed and it's not getting done correctly?
Right.
You know, even though you're still living there, I didn't destroy the place. I left it clean and followed my contract because I wanted my deposit back, and I didn't want to go to small claims for damages. But there's some people who, you know, they're going to be renters forever, and that's fine. But at the same time, and that's the people who don't care about their credit, who don't, you know, and then they wonder why, because you've had people reach out to you and say, hey, I want to rent a property, and you explain to them, you know, what's asked, especially if you ever put a property as a rental on social media. Hey, right away you'll get like 1,000 inquiries. Oh, what do I need? I want the property. Then you send them. I'll send them the form. I said, here, you know, here's the Glavar app. You know, give me this information first, and then I'll show you the property. And they're like, oh, you want a credit, and you want? I was like, yeah. I'm not just some random. I'm not going to just rent this out to random people. So yes, you might just be a stranger, and I'm going to do business with you. But these are the qualifications we need, and then they get upset
Yeah, I know
because
credit's a
they
big
are like,
issue. I come across a lot of clients that don't have the best of credit, and they seem to not understand what realtors' jobs are when it comes to helping with rentals, which is a lot different than when we're agents for our buyers and sellers. And a lot of renters, I have to explain to them, it's not up to me. It's all subject to the owner. It's not even up to the property management. Sometimes the property management will have certain recommendations for what they look for in clientele, and the owner themselves will say, well, I want it even more strenuous and even more strict. I've seen 720 credit scores for rentals. Like at that point, I'm recommending that you purchase a home. I'm not going to put you in a rental unless it's something that you desire. In this market
yeah,
in Vegas, I mean, I think it's always lucrative to purchase. I believe that when you turn 18, as parents, we should help our children at 18 purchase their first condo. I think that should be what you do with your child, not here move out into an apartment and make somebody else rich. Let's work together, buy you property. Either you can move into this property, rent this property out, but either way, now you're an owner of something and you have residual money, you have something that's tangible, you have to be responsible. I mean, I think it's probably one of the best things you could do for a child that's turning 18, instead of leading them down the path of just being a forever renter without really having the know-how to
and,
make it out of that.
and you know what? That's the way to teach, you know, your children about finance and money management. Which one thing I see more and more where they're like, people ask, oh, why isn't the school system, do they don't teach, you know, how to do taxes or these other things? And I'm like, well, you're getting an education. If you want to learn finance, you know, go to college and learn finance. A lot of the times, lower I don't want to say lower education, because public school, the way it's funded, isn't meant. I mean, the way they're built, they're built to make workers. Unfortunately, that's a whole conversation for a totally different time.
Yeah,
But
agree.
the lack in a lot of communities, and you and I had this conversation last time, and especially in our market. Well, I say everyone, but I'm talking about like the Latinos, for
Yeah, the
example.
Latin and
We
urban
have
market. We focus on where we're from. I mean, clear. Let's let everybody know. You know, our goal as agents is to help our communities, because the disadvantage that we have in our communities is education. And some of our families are becoming first-time home buyers for their entire lineage. They've never ever owned property. So, we're fiduciaries for these people's money. We are guidance counselors. We are the teacher. We are their friend in this situation, and it's a big role that we have to take because we are essentially creating a new generation of homeowners that hopefully we can continue to have a 30-year 20-year relationship with them and their family and their friends and build a web off of them. That's kind of how our job works. And in our community, I mean, I take great pride when I have a first-time home buyer that's a young couple that came out of, the ghetto, and they're the first time in their family to be homeowners. They're young or old. It's not an age thing. It's just the thing that they have accomplished. It's always it's a good feeling, and we want to make sure that we always provide the best information and we're able to provide a smooth transition because it's so much money that it makes it the most terrifying thing you can do. It really is. Most people to be their largest purchase. That's what you were saying earlier.
Yeah, and you're right. It is extremely scary for a lot of them. They're on the hook for 30 years, and most people won't live in that property for 30 years. Families grow. They either get bigger, they get smaller. Things change. Most people who buy their first home, that's their starter home.
Right.
And I hate to say that, but you know what? It is, because then once they become homeowners, like, you know what? I dream of this in my home, because I've talked to a few buyers. This last buyer was my young cousin, and again, through my family, I work with them, and they're just like, hey, we want him to buy a home. This kid's 22. So as we would talk about properties and how he's going to pay for things, and how he didn't get a down payment assistance, he's like, why am I going to get free money from the government? I'm like, well, two things why. Because I'm going to save you money in the long run. You're thinking, penny smart, dollar dumb. You're paying less money out of pocket now, but they have their fixed rates. So instead of getting that 2.9, because you have a 780 credit score that I help you build over the course of a year, you're going to be getting a 4.25. So your payment's going to be much higher. So he's like, oh, okay. So in the long run, you're saving a lot more money by paying an extra $3,000-4,000. I ended up paying I think the total to get him to close was like $12,000. Because I got him some credits and some things of that sort. But again, he's just like, oh, this makes sense.
What about PMI? Did he have PMI?
So he did.
Okay.
He did have a PMI until we ended up closing one of the properties for his dad, and his dad's like, hey, well, let me just front him the 20% or what he was missing to make it 20%, nice. And then he could just pay me on the side as a loan. And I was just like, you are doing what other generations do for their family members, where their family will gift them, and they're just like, he's like, oh, I didn't know that. And I was like, yeah, we're going to do it as a gift letter. So we had to explain to them that. I also explained to him the importance of, he's like, hey, you know what, I've been having this 401k from work. I don't know what to do with it. I was like, let's sit down and talk about that. We talked about a living trust because he has a little girl and they're married. And I was like, you don't want to let anything up to chance anymore. You're a homeowner now. You have some money saved up, and you're going to start building your nest egg and your future. So these are the steps you're going to take, because, as family members, especially in our community, no one wants to talk about, there's a few things that are taboo in our community: money, religion, and sex. You never talk to your family about any of those things because no one wants to talk about it. And I feel it's again, the fear comes from lack of education.
Right. Yeah, I agree 100%.
So when it comes to money, everyone, it's taboo because everyone wants it, but no one knows how to make it work for you until you've built things like that. So it's very important that we teach our kids and say, hey, look, like I tell my kids right now, they're on allowance. They don't, to a certain extent. And then I was just like, all right, but I manage how much they spend, how much they earn. To them, money is, I'm like, it's a tool. Mm-hmm. Money is one of the biggest tools you could have. So again, your point when you're talking about the condo reminded me of is it Robert Kiyosaki's? Have you read The Rich Dad Poor Dad?
You know what? All full disclosure, I haven't. It's on my list. I actually got stuck in this Thomas Sowell book marathon. I started reading his economics book again. the new version of it, and then I got into his applied economics, and then I got into a book on racism that he has as well. And you know what? I'm gonna tell you the truth. Be dead honest with you. I went to school for design. The cover is so fucking ugly that I've avoided reading it. I'm that
You know
shallow.
what? And and it's funny. And I always thought it was like this giant pyramid scheme because you'd always see these seminars. And I'm not a big fan of like people paying into this public speaking and this stuff. But what he talks about in this book is he calls his rich dad and his poor dad. His real dad was a doctor, and he lived in Hawaii, and they were middle class. But he calls his rich dad, who he went to work for, and he owned restaurants. He owned a lot of property in Hawaii, and he would play Monopoly with him and his best friend, who he called his other dad. So the way the story goes, he's just like 3 houses, 1 hotel. 3 houses, 1 hotel. The reason why it's 3 houses, you get your most return on a property in Monopoly having 3 houses. So he would say, hey, little by little, buy 1, then 2, then 3. So yeah, if you could get an 18, 21-year-old and help them, instead of moving out, they're moving out, but they're owning that condo, bro, you're already setting them up on a track to where it's infinitely better than anything else that they would have before.
Right.
So it's one of those things where you're just like that. That kind of resonated with me. I was just like, that's great. It's like I was like going back to talking to my younger cousin, my client that we just closed. I told him, I'm like, look, you know, I don't follow a certain business method. With my money, it's a little bit different, but X amount always goes to save. So that goes towards investing and towards this. And then you have money that you could go do whatever you want. If you know what, you're 10% of what you have goes to having fun, and you want to light it on fire, that it's accounted for. It's in the plan.
Right.
That's fine.
That's your
They're
budget.
like, yeah, if you want to go out, that's exactly it. But the rest, always stick to having a savings plan. And that's one of the hardest things that people have is the patience and the know-how of how to save, and again, getting to the point where they could buy, invest, and go from there. But it's funny that everyone now is like, oh, pull yourself up from your bootstraps and, work harder or stop spending on this. Yes, budgeting is a huge tool.
Right.
But at the same time, that's another conversation, some of these things that are going on with major corporations. But talking to first-time buyers, I would always suggest buying. There's never a bad time to buy.
So in closing,
even right now,
in closing, right now with this volatile market, to me it's a volatile market because we don't know what's going to happen. So I'm not saying it's volatile because it's moving. To me, it's this weird stagnant river that's going to start flowing soon enough. So first time home buyer comes to you, they say, hey man, we're scared of this year, we don't know what's going to happen. What's your advice to them and well, everyone out there that's considering or not considering buying a home? What would you say to them to change their mind?
So I would bring this down to numbers, basic numbers. I'd be like, hey, you know what, Mr. Smith, what are your monthly expenses? Do you pay in rent for right now? And they're just like, on average, if it's a young couple, if it's just 2 of them and they're renting out a 1-bedroom, 2-bedroom apartment, they're paying about $1,000. Okay, it's understandable. That's actually pretty decent. You have everything else. How much do you think you want to be in for? On average, right now, any home is going to be competition where you get, even if they were at $250,000 to $300,000, a mortgage, even so you're putting it at 3.5 and they're getting it at a 3% interest rate, it's looking about $1,600. So you're going to be able to spend $500 more. If your rent goes up after your year lease and you're at 12 because you're tired of being in this shoebox,
right,
you're going to be in for the entire year for about $14,000. That's first year. If you're going to wait for the market to drop, these drops didn't happen overnight until the market had already crashed. So if we're going to wait, foreclosures and evictions, we saw back in 08, 09, it was taking these banks months, if not years, to get these people out of the homes.
Yep.
So if you think you're going to get a deal in 6 months, you're not. You think you're going to get a deal in a year, you're not. So here's it. How much more can you save by waiting 2-3 years instead of buying now and start paying towards your own home?
Right, because ownership is key in this market. No matter how volatile the market may be, ownership is always key.
Correct. So I was like, if you're like, so you say it takes 3 years for the market to drop. So these homes that are now 350 come down to 270. So now they're down $80,000, but you still had to pay for 3 years, and you're in the whole 45,000.
Bingo.
And how but you're okay. So the house is down 80,000, but now that interest rate isn't 3.
Right.
People were paying were getting hard money loans and paying 10, 12% interest rate.
Right.
That's another thing they don't talk about. And so it's like,
well, it's like
FHAs.
It's like the way that people, when they put something on sale and you go, oh, I saved $400. No, you didn't save $400. You just didn't spend $400. There's a difference.
Correct.
You waiting for the market to correct is going to drain you of your resources, especially because the banks will take advantage of the correction and start to tax this interest rate, because it can't stay this low forever. There's no way.
No. And when we know it's going to happen, it'll correct itself. And if the property values go down and the prices go down, interest rate goes up. We've seen that time and time again.
Right.
You could ask anybody who, the boomers who bought their houses way back in the 60s and 70s. People were paying up to 20% interest rate. Yeah, the houses were $60,000 or whatever. But again, it's the same thing. They were just paying a completely different interest rate.
Right.
So I would say, hey, take advantage of this this super low interest rate.
Yeah, 2.4.
Stick with it.
Was it 2.5? It's crazy. It's just, these numbers it's almost free money. It really is free money.
It's at this point it is. And here's another one. Anyone who's listening to this, if you're a homeowner and you're paying above a 3.5, get to a lender.
Refi.
Call me. I'll set you up with refi instantly. I was like, I would advise to touch any of the money that you have in equity. I would just say, just refi, get the lowest payment, and then what you do from there. If you were used to making a mortgage payment that was $1,600, you just refied, rolled the cost of the loan into it, and your mortgage. You first and foremost, hopefully, get rid of PMI.
Bingo.
If you have an FHA, get rid of your MIP, get rid of that. And if you're going to go conventional, get rid of your PMI. So you're not paying for that insurance anymore on your mortgage loan. That's first and foremost.
And that shit
you're
is
saving
not
money
cheap.
on that. No, it's not.
It's taxing.
So now you're saving those $500. You're saving. This is what you do with that money. You put that back into get rid of whatever credit card debt you have. Apply that additional money to get rid of any additional debt. And ask them to go through title. Ask title to pay them off for you. So you don't have that on you. You're like, hey, the title company that I work with, if I say, I want you to pay off these collectors with the money that's going to be taken out, I don't want to see a dime of this.
Yeah, just completely take it out before I even. Yeah, that's a great way to actually keep from